G'day guys, Mitch here from Finance Fitness Coaching today. Look, today I want to talk to you about the hidden danger in Australian banks and in Australian banking system. This means it's very dangerous for you to wrap all your assets, your properties, your businesses, your credit cards, your super, your personal accounts, all with the one bank. The thing that we want to talk about and that the banker won't tell you is that there's an all monies mortgage clause. So if I show you an example of someone just recently who is coming to my office, what they have is all their assets with the one bank. So they have their business with this bank, they have their FPOS facilities, their trading accounts, their cash flow line, all that sort of stuff. They have their home, their principal place of residence with this bank. They have 2 investment properties with their bank, a credit card, their superannuation, and all the insurances. Now the bank has said to them, oh, guess what? We believe the property here, which is in regional Queensland, has dropped in value, so we need you to pay down this loan. We would like $90,000, please. Can you have that for us in 30 days? Oh, well, you can't have that for us in 30 days? Oh, well, we might have to put you in default. So here is the problem. You might get a new bank manager, or you might be all convenient at the start while the good is going, but very dangerous for you to put all your assets with the one bank. And I can tell you why. Because they can call that loan in at any stage. So let me tell you a little bit about the culture of Australian banking. The all monies mortgage clause, we've gone through this, which is how they take all the securities and all the personal guarantees they can across all of your portfolio, your investment properties, your business, you know, all that sort of stuff. So they are actually paid, bank managers and stuff are actually paid to sell you more products. They're trying to brick wall you, because it's been proven, they've done statistics, if you have more than 3 products with that one bank, you will probably never leave that bank. So if you've got your credit cards, your insurances and your home loan, your first place you'll go for your business or next property will be that other bank, because it's convenient. But that's the most dangerous thing you can do. So more products, and also when they sell you more products like insurances and credit cards, FPOS facilities, they get paid incentives, they get bonuses and such. So very dangerous for you. They can, at any stage, if your property portfolio has gone down in value, or if they don't like a certain industry. A childcare client of mine had this problem a few years ago. They didn't like childcare or milking industry, or the dairy farmers had a hard time some time ago. Service stations, they all go through a certain amount of stuff on their books, and they say, we've got too many service stations, we've got too many properties in rural Queensland. So they go and look for it, and they make you either reduce your limits on your existing facilities, which means you need to come up with cash ASAP, okay? They may ask you to pay out your loan as soon as possible. I've seen it before where all 4 of the majors at any one stage has said to a client, we need you to pay out this home loan. Even though you might be in front of your payments, you might be making your payments, they may ask you to pay it out, and if they don't pay you out, they may freeze your accounts on your business transaction account. They may also put you in default. So you cannot refinance a home loan when it's in default. No other lender will touch you. Now, it doesn't matter how they put you in default. They may say, we want a payment of $60,000 to bring your facility down, otherwise we're going to make you charge 14%. And then trying to refinance that 14%, it's not going to happen. So they may even take 100% of any sale that you have. So if you have a multiple property portfolio, you decide to sell because there's a bit of pressure, or you're in a bind, you want to exercise and release some equity, they may take the full 100% of those proceeds and make you pay debts down on other facilities. So very important. They also may bankrupt you, and we've all seen this, we've heard the stories before. So all monies mortgage clause is the most important thing that will stop you from getting ahead as an investor and an entrepreneur. You really need to think about this and shop your money around. Go to different banks. The next page is another example of what it really should look like. So you have your business with Bank One. Now, typically this business would be run through a corporate structure, such as a company as trustee for a trust. You would have your principal place of residence or your home. This would be with Bank Two. You never ever go to another bank for any other loans or facilities once you have your home with this one bank, okay? And then you would have your investment property portfolio, Bank 3, Bank 4, Bank 5. So really important that you shop your money around. Banks are money shops. Treat them that way. I've seen too many times where, clients are very stressed. They come and see me. They've got portfolios worth X amount of dollars, yet the bank has said, we need you to, come up with some money. We're going to bankrupt you. We're going to default you. You got 30 days. Get out. So very important. They could make you sell your principal place of residence if it was all wrapped in with the one bank, which has probably got the most capital or most equity in it, rather than selling one of these investment properties. So please feel free to call us, talk to us, leave a comment down below, leave any bad stories. I'm sure there's a few out there. This is Mitch. I hope you have a great day.